Welcome everyone to Vested Interest. This is Shane back for a pick of the day video. First one of the week. It is Monday, March 10th. We're going to take a look at Novo Nordisk. This is out of the healthcare sector. And before we get too far in the video, if you could do me a big favor, it doesn't cost but a couple seconds of your time, but it really does help a small YouTube channel like mine with the YouTube algorithm. It helps to spread the videos a little bit further. Take a couple seconds and hit that thumbs up button down below if you find any value in the content. If you are a dividend growth investor, make sure you subscribe to the channel. Join us on this journey to financial freedom. Join the Vested Interest community. A lot of you out there watch the channel but are not subscribed, and you keep coming back, so it leads me to believe you like the channel. So make sure you subscribe down below. Hit the notification bell so you're notified whenever I put out any new content. I do this stock pick of the day video series Monday through Thursday when the market's open. We take a look at a company's stock that's pulled back on the day, run it through the screener, and see if it makes it onto my watch list. Just because it makes it onto my watch list does not mean I am buying. It means I'm interested in doing more of a deep dive. This is an initial screener, a way to look at companies, thousands of companies out there in the stock market. This gives me an idea if I'm interested in doing more of a deep dive, taking more time to look at the financials of the company. There is also the thanks button down below. So if anyone would like to buy me a cup of tea or support the channel in that way, there's that option as well. Really appreciate everyone out there. Special thank you to the subscribers and viewers of the channel. You guys and gals are awesome. The channel continues to grow because of people like you. And lastly, share the video with anyone you think that might find value in the content. Other dividend growth investors or investors in general out there, go ahead and share it with them as well. Here's the Vested Interest Stock Screener. You can pause this and run through this criteria. We're going to look at this at the end and see where it shakes out. Must meet 5 of 8 to make it onto my watch list. And again, just because it makes it onto the watch list does not mean I'm buying. It means I'm interested in doing more of a deep dive. Do not ever just blindly buy something that makes it onto my watch list, or even something that I am buying without understanding the company and doing your own research. And here at the bottom, you'll see highlighted in green. That's why I highlighted. I use price to book for all companies, but for overall screener, I add this in for companies out of the financial sector. So that's banks, insurance companies, right? And not all companies. Like, it doesn't really work well for credit card companies, but one being fair value. Don't blindly use one for fair value on price to book for companies outside of banks and insurance companies. That's really what it's for. And then it must meet 6 of 9. You can use price to book for any company, as I said. Just make sure you're comparing it to itself historically, where you can see if it's over or undervalued using price to book, or compare it to other companies in the same sector, and that would give you an idea where it shakes out among its peers. All right, back to Novo Nordisk here. Check them out at their homepage, www.novomedlink.com. That's www.novomedlink.com, www.novomedlink.com. All right, we are talking about Novo Nordisk. Patients are our top priority, and we are committed to the responsible use of Wegovy. These are their 3 drugs: Wegovy injections, Ozempic injections, and Rybelsus, I believe is how you pronounce that. Semaglutide. And from what I read on their homepage, there are no other drugs on the market that have this semaglutide in them, right? So they are kind of on their own with that one. And a lot of these are around, it seems like, the weight. Well, let's just read them. Wegovy here, and I've heard most of these. Ozempic definitely, and I definitely have heard Wegovy. This is a relatively new one, I think. Wegovy is an FDA-approved prescription medicine used in combination with a reduced calorie diet and increased physical activity. So it looks like it's around the weight loss area there, to reduce the risk of major cardiovascular events such as death, heart attack, or stroke in adults with known heart disease and either obesity or overweight, right? Obesity and overweight. To help adults and children aged 12 years and older with obesity, for some adults with overweight, with weight-related medical problems, lose excess body weight and keep it off, right? So it's a weight loss drug. Ozempic here is FDA-approved prescription medicine used along with diet and exercise to improve blood sugar glucose in adults with type 2 diabetes, to reduce the risk of major cardiovascular events such as heart attack, stroke, or death in adults with type 2 diabetes and known heart disease. So right there's a diabetes drug. Again, along the lines of overweight, usually people in that category tend to have issues with diabetes. That's not the only people. I know some people that are in really good shape that have diabetes too, so don't think that it's just because you're overweight there. And Rybelsus. Rybelsus is an FDA-approved prescription medicine used along with diet and exercise to improve blood sugar glucose with adults with type 2 diabetes. Another one around diabetes, but also around your weight and exercise, right? So those are their 3 drugs that they have under, and they're just a manufacturer of drugs. That's what they do. That's their bread and butter. They're like a Johnson & Johnson or a Pfizer or Bristol Myers Squibb, but they are just a foreign company, right? And they really specialize in these 3 specific drugs, right? I don't believe there are any of the other options on the market, drugs that would be, similar to Wegovy, Ozempic, or Rybelsus. But I also don't know when their patents expire. So you'd want to know that about this company. When do these patents expire, and when can you get some non-prescription drugs that would match these, right? All right, let's keep going. The reason we are taking a look at Novo Nordisk today, down 9.43% on the day, big drop, closed out the day, and we are talking about Novo Nordisk, ticker NVO, out of the healthcare sector, closed out the day at $78.95 per share. Looks like they might be even down a little bit more in the after hours, at least when I pulled this information. 52-week range as low as $77.82, right up against their 52-week low, and as high as $148.15. So they are definitely within 15% of their 52-week low. Market cap of $356.289 billion, a beta of 0.17. So typically this company has very low volatility. PE ratio 24.14 seems a little elevated, but not necessarily a showstopper. Maybe they just typically run with a higher PE. Some companies do. Are they growing fast enough to justify it? That's really the question. Earnings per share at $3.27 per share. Earnings date coming up May 7th. For dividend, $1.62. They are a semi-annual payer, so a couple times a year, and they do fluctuate from those payments. We'll see that here a little bit at the tail end of the video. 1.185% starting dividend yield right now. Ex-dividend date, March 31st. Looks like they're going to pay out April 8th. So if you were to buy them now, and you need to buy them March 30th or before to be in line for this next dividend payout, so if you were to buy them now, you would get that March 8th payout. 1-year target estimate of $114.16. They see some upside, as at least the Yahoo Finance does, from where it sits currently, but not quite back to its 52-week high. Actually, quite a bit off its 52-week high, $148.15 versus a $114.16 projection. So not even really getting close to their 52-week high, at least according to Yahoo Finance, over the next calendar year. Jumping over to the right, I like to look at dividend yield theory to see if the company is potentially presenting any undervaluation. To do that, we look at their 5-year dividend yield average, 1.43%, compared to the current 1.85%, or over here, 1.85%, same number. Since their current dividend yield or forward dividend yield is higher than their 5-year average, that speaks to undervaluation, at least according to dividend yield theory. Now, they also have a payout ratio of 43.78%, which is much lower than the 75% or less that I look for. So lots of room to increase that dividend. Doesn't look like they're in danger of a dividend cut any time soon. Dropping down, looking at free cash flow. I want growing free cash flow over time. Typically, if a company has growing free cash flow, they can do some things with that free cash flow. They can pay down debt, make acquisitions, reinvest back into the company, pay out dividends, buy shares, and what we all want as dividend growth, or should want as dividend growth investors, raises in those dividends over time. Going back in time here, December 2021, they had $47 billion in free cash flow. December 2022, up to $64 billion. December 2023, up to $70 billion. So nice steady growth there over the 3-year period. But it looks like a bit of a downturn in 2024, down to $69.5 billion. They are repurchasing shares as well. 2021, $19 billion. 2022, $24 billion. 2023, $29 billion. And just like their free cash flow, their repurchase of shares dropped a little bit in 2024, down to $20 billion. So still pulling shares out of the market, but a bit of a downturn in 2024 after a nice 3-year increase from 2021 to 2023. Jumping over to stockanalysis.com, another source I go to for information. I do recommend more than one source so you can make sure the information you are looking at is accurate and up to date. And this is part of the reason why. As you can see here, price targets were last updated on December 23rd, 2024. Well, we're already in March, right? So this is information is almost 3 months old now. That's why I say I recommend more than one source so you can make sure the information you are getting is accurate and up to date. And this might indeed be still up to date, but it was last updated on December 23rd, 2024. All right, they have 3 analysts that have taken a look at this. They call it a strong buy. A low estimate of $105, which is not much lower than what we saw with Yahoo Finance on the previous page estimate. That would represent a 20.45% increase from where it currently sits. Average estimate of $141.67. That would represent a 62.52% increase from where it currently sits. And if it happened to hit their high estimate of $160, that would represent a 83.55% increase. And you could collect that 1.8% dividend yield if you were to buy them now. Jumping into the statistics, I like to look at return on equity and return on invested capital to see how well the company is reinvesting back into itself. And I like 10% or better for both of these metrics. Now, return on equity smoking high, 80.78%. And return on invested capital, again, at 46.03%. Both of them well above the 10% I'm looking for there. EPS growth forecasted over the next 5 years, I like 5% or better. They're looking at 15.61 for an estimate here. So again, more than 3 times what I'm looking for there. Revenue growth forecasted at 12.9%, which is very fast revenue growth. So maybe they do justify that 24 PE if they do indeed hit these earnings per share growth numbers and the revenue growth numbers. All right, let's wrap this one up here before we look back at the screener. Again, semi-annual payout ratio 41.38, well under the 75% or lower I look for. Now, dividend growth says that they're negative. It's hard for me to really judge this. It does look like they fluctuate a little bit. We'll talk about that here in a second. I'm going to go with it that they are a little bit negative, but we'll talk about that here in a second. Growth of 3 years. Buyback yield is 0.71%, so when they are buying back shares, they're doing it at opportune times at least. Shareholder yield is positive at 2.33%. They do pay out semi-annual, April and August, looks like their time frame is. And let's talk about this payout ratio. You can see here going back to, and some of this I believe is fluctuations in translating their dollars to our dollars, right? Some of that I think is exchange rate. Some of it, I just think they fluctuate their payouts, maybe based on earnings, maybe based on free cash flow for the quarter. However, they're deciding how much they pay out. It does look like they fluctuate. So if you look at April, let's just kind of run through the April timeframe. Going back to 2020 here, 78 cents and some fraction of a penny. Then in April 2021, 47 cents. Definitely a drop there. Then in April 2022, back up to 51 cents. Then in April 2023, up to 59 cents. And then April 2024, up to 92 cents, but then the April 8th one that they're going to do is 78 cents. So it looks like a bit of a drop. Maybe that's what they're calling the 5% drop, right? Is that what it is? And then same thing looking at August, 25 cents and some fractions of a penny, then 27 cents, then 29 cents, then 44 cents, and 51 cents. So August payments definitely look like they're steadily increasing. I think it's this decrease from January announcement and April payout to the February 5th announcement and April payout, down from 92 cents to 78 cents. So it definitely looks like they at least dropped that one. We'll have to see what's going on in August whenever they do that to see if they continue the August trend of increases in payment. So I'm going to go with a negative 5.23% decrease here, but it does look like they fluctuate a little bit. Their April payments, their August payments look like they're pretty well, a couple penny raises. 29 to 44, 44 to 51. So most recent August raises were a little bit higher, but a couple pennies or more in their August raises. All right, let's run through the screener. Understand the business. Again, they are a pharmaceutical company. They're manufacturing and selling you drugs around diabetes, weight loss, that sort of thing. Growing free cash flow. Had the one down year in 2024, so we're not going to give them that. Growing dividend. I'm going to say they're negative. It looks like the last August payment or last April payment to this April payment is going to be down, so we're not going to give them a check there. Dividend payout ratio is under 75%, so check there. Dividend yield theory says they're potentially undervalued, so check there. It is within 15% of a 52-week low, right up against it. Return on invested capital, return on equity, both smoking high, well above 10%, and earnings per share growth, again, well above the 5% I'm looking for there. So 1, 2, 3, 4, 5, 6 of 8. This one is going onto my watch list. I do want to do more of a deep dive into the financials. Let me know what you think of this company in the comment section down below. All right, that is really it for this one. As always, appreciate you stopping by. If you haven't done so already, don't forget to show me some love. Hit that thumbs up, ring the notification bell. Most importantly, subscribe to the channel. Drop a comment down below. Let me know what you think of the video. Let me know what you think of Novo Nordisk. Is it one in your portfolio? Is it one you're watching? Maybe you're part of the reason it's dropping. Is it one you're selling here? Are you waiting for more of a downturn before you jump in? Let me know. Would love to hear from you. I do personally read and respond to the comments. I'm always interested to read your questions, opinions, or suggestions for future topics. So if you have a company like Novo Nordisk you like me to cover in the Stock Pick of the Day series, drop in the comment section. I'll work it in the rotation on a day it pulls back. And this is Shane signing off, wishing peace and prosperity to you and yours. And remember, financial security comes to those who take a vested interest. Hey, thanks for stopping by. Thanks for tuning in. Hope you have a great week, and we will see you in the next one. I am not a financial advisor. Nothing in this presentation should be considered financial advice. I'm only sharing my opinion, investing for educational and entertainment purposes. Investing involves risk. You can lose money. You should never invest any amount you're not comfortable with. Always do your own research. Invest based on your situation, circumstances, and select criteria, or seek the advice and counsel of a certified financial advisor.